Welcome in, everybody, to today's Tesla Space. Thanks for being nice and timely right here at 12 p.m. Eastern. Appreciate everyone being on stage. Got the coast invite out to you there, Penny. Thank you, Shy, Kristen, Simon, for being up here. We should have some more coming in today. Feels like it's been an interesting run here for Tesla. We're still sitting pretty nicely up at, right around the 180, 181 level. Tesla's up 3.5% today. It's actually having a pretty solid day. Still down 27.5% year to date, but have made a decent sized comeback in the past month, up 26%. So, with that being said, we got an awesome panel on here today. I am excited to kick into things. Penny, you got any thoughts off the bat here on things you've been looking at? Obviously, we're going to talk about this shareholder vote, and then I'm excited to have Simon here as well today for really a deep dive into the fundamentals. And I see we got Omar coming up too. What are you thinking, Penny?
Yeah, I mean, for me, the news, what everyone's talking about, at least on my feed, is the shareholder vote. And people probably know more about this than me because I didn't make it into the space about it yesterday. But Warren, who, in my opinion, has been one of the most steadfast bulls for the longest time, got spooked yesterday and sold some of his stock because he thinks that the vote is going to go bad and Elon is going to run away from the company. And I was just kind of sitting over here with my jaw on the floor. Like, I can't believe that the FUD has gotten so strong that someone who's been, reliable, mistake me if I'm wrong, but I don't remember him ever selling. And even he broke down yesterday and fell for the FUD and sold 20%. So for me, I'm really interested, I mean, is that a sign of the bottom if someone like Warren is selling and the prices are still going up? I'm not much of a price guy anyway. I've never sold. I don't plan on selling now. But I just thought that was really interesting, especially when, in my opinion, we're so close to really, really big milestones that could mean a run for the stock. I mean, if Elon is right in what he said that the next couple versions 12.4 and 12.5 are going to be groundbreaking and continue to make huge progress from an FSD perspective, my experience right now is that 12.36, I think, is what I have, whichever version the latest version is. I mean, I am not intervening ever. I'm going all up and down Orange County and San Diego. I go to my family's house from my house regularly. I bring my kids to school and back. The only time that I'm driving my car is if I wanna go faster than FSD will go, or if I wanna check something on my phone, and FSD is just won't let me because 'cause it'll disable right away. So, other than that, though, I'm running everywhere. I mean, I'm parking now, I'm using the parking feature, and even that works really well. The car, basically does not need to be driven anymore, and I find it fascinating, that people would get spooked right, when I think we're on the verge of really, really big things.
I hear exactly what you're saying. Omar, you want to weigh in on this?
Well, there's a lot of noise, obviously. People worried about this compensation vote, things like that. I think it probably is all immaterial. I don't think that Elon's going to leave the company within the next month. So I like to focus on the things that I think are actually going to be material. And, like Penny said, the software on Hardware 3, which is, from any car 2016 plus, it's now doing about 75% of my drives without any intervention. So I turn it on, it gets out of the parking lot, handles city streets, highways, parks again. Most of the time now, 75% of the time, I don't have to touch anything, which is just insane. And they're now rolling out a new version of the software, FSD 12.4, to employees, and it's going to start going out to customers this week. And it's a pretty major update. Elon has said that we should expect the miles per intervention to increase 5x to 10x. So, really, a crazy rate of improvement here. We're seeing the effect of all that compute, all that data. And it's now gotten good enough that they are going to go hands free with this update. It's pretty significant. They're still going to be tracking your eyes, but they're no longer going to nag you to hold the wheel. So, for For the first time, you'll be able to drive hands free, just push a button, have your car do the drive for you, and it should be much better than the current version. Then they've got another version coming next month, 12.5, which should bring end to end to the highway and have another significant leap in terms of miles per intervention. So it's really crazy. They've kind of come from being an underdog to actually leapfrogging Waymo and other services in many ways, and especially in terms of the driving feel. Not necessarily in terms of miles per intervention yet, as Waymo's pre-mapped and operating within specific areas, taking certain routes they know work well. But I believe it's going to actually leapfrog them in miles per intervention as well, the way they're growing. So that's pretty significant. Now, we're really gearing up after the shareholder meeting in June for another event in August for the Tesla Cybercab reveal. So this is going to be a pretty groundbreaking product. They are building it using this new unboxed process where they build sort of separate subassemblies of the car and connect them together at the end. And it's really interesting what they're doing with this vehicle. They're really looking at a vehicle that's lower cost than the 3 and Y and actually physically smaller than the 3 and Y. And it's going to be a two-seat vehicle, essentially this bench. It can fit two or three people, and it's just aimed at the lowest cost per mile possible. If you make a smaller vehicle, you can have less battery and get the same range and have greater efficiency. And you look at the average, car on the road today, it's probably got one person in it most of the time, the driver. And I believe for rideshare, the average number of occupants is something like 1.2. So I think they've really seen a segment here of the market that's unaddressed. When you look at most of these other driverless vehicles, they're typically bigger vehicles. You have, maybe four seats facing each other or something like that. This is a little bit of a different vision for a small two-seat car that's going to have basically the lowest cost per mile possible for an autonomous service. And they've dropped a couple hints. You can kind of see it on the X timeline. They had a video about the shareholder vote yesterday, and they threw a couple of Easter eggs in there. You can kind of get a first peek at what this vehicle might look like, or at least some of the design sketches around it. And yeah, I think that's going to be super exciting to see their vision for that product on 8.8. Separately, we got some numbers out of China, some pretty decent numbers. It seems like their promotion with 0% interest and $0 down is starting to work. Tesla posting some pretty impressive sales figures in China, topping the luxury charts, second only to BYD in terms of EV sales within China, which they have lower price point vehicles and sell mostly into the domestic market in China. So it really makes me excited looking at these more affordable models that Tesla's talked about coming down the pipeline and what those market opportunities could be in places like China as they launch those more affordable models. BYD really highlighting how much of a market there is, I think, at those lower price points. And, I think also the Cybertruck seems to be a hit. It is actually now outselling the Rivian R1T in its first quarter of production. They just started producing it in December 2024, so Q1 was their first quarter. And in the first quarter, they outsold the Rivian R1T. In March, they actually outsold it 2-1. And based on the numbers we're seeing, they are actually looking like they're set to become the number one best-selling electric truck in the world in Q2 or Q3, beating out the Ford F-150 Lightning, which is currently taking the top spot. And you're seeing a bunch of celebrities get them, Kim Kardashian, Kevin Durant, Justin Bieber, all these sort of, it's really becoming, I think, kind of a status symbol. They're selling them for, $100,000 right now. That price is going to come down to $80,000 and $60,000 within a year. So, I think they've got some pretty incredible products in the pipeline, and they they are kind of in a situation right now where they can't supply them. In Q1, you really saw, for example, based on data from S&P Global Mobility, the Model 3 sales by registrations down about 60% in March, for example. So the Model 3 is the second best selling EV in the United States. And with that down significantly due to the ramp up of the new model, which looks amazing, by the way, I've got a performance on order, new performance Model 3. But I think the ramp up of that really challenged them in the first quarter. That was part of the reason why you saw such a big delivery miss. And I expect that as they're able to actually supply these products to the market and match up what they're actually producing with customer demand, they are probably going to exceed expectations in terms of what they can deliver this year.
Those some great points summarizing some of the latest updates that are coming in. Appreciate the comments we're getting below. We're happy to do these spaces. I know that they provide a great source of information, and there's a lot to discuss right now. A lot of activity going on with Elon and Tesla. I did bring in Simon today, who's put together some really awesome research reports that he wanted to share on Tesla. So, Simon, can I turn the mic over to you here?
Absolutely, Wolf. Thanks very much for having me on the show. Looking forward to talking about Tesla, especially with some others who follow the company closely as well. Tesla, I've always approached as an investor. This is one that I originally got back in 2013. I had acquired a large stake in a company called SolarCity, who, of course, got purchased by Lyndon's cousin, Elon Musk, in 2016. And that kind of rolled over for the next decade, holding onto my Tesla shares, which, of course, appreciated fantastically. And it went on to help me fund my own business, Seven Investing, the appreciation of the stock, where our goal now is to help people find great long-term investments in the stock market. So Tesla was kind of the quintessential example, has a special place in my heart for it. And I think that, when you look under the hood of what's going on with this company, it's just fantastic. The more that you learn about it, the more you love the vision of Elon. You love the execution, the willingness to sleep on the factory floor and put in 100-hour weeks. And then also this guiding light that he has of the master plan, what he wants to accomplish for humanity. It's just amazing what he can do that no other CEO can do out there. But then I counterbalance that to some extent, again, as an investor. And I can see why some people, are a bit hesitant when Elon will put his foot on his mouth on social media, or, you've got the shareholder vote for his compensation package, or these other things. As excited as we are about Tesla's future, as excited as I am about all the innovations taking place, I wanted to look at this kind of objectively. And thank you for mentioning the discounted cash flow, the valuation model that we've now put up on 7investing.com. This is something that I spent about the last 3 weeks every day on. I've gone into social isolation, hibernation, lots of caffeine, right? But it's been interesting to kind of look at this and objectively look at where is the electric vehicle industry as a whole heading. If you look at the global market and how many total light vehicles were sold globally and then by region, and then the electric vehicles sold by region in Europe, and then the US, and then in China, and then you kind of see how that's going to increase out for the next decade or more. And then what is Tesla's share of that going to look like? I tried to model top down first and kind of look at what the market looks like. We've seen them ramp up fantastically well with the Model S, then with the Model X, with the Model S, Model 3, and then the Model Y. And then, now, as Holmars was just mentioning, the Tesla Semi is potentially a project in the future. But I think in the near term, the Cybertruck is going to sell incredibly well. I don't want to go through the entire model. I would rather just people look through it on their own if you have an interest in it. But I think it might be interesting to see some of the highlights and the key assumptions that I have as the most likely scenario, again, from an investment perspective. I think that in the short term here, we saw that Tesla whiffed on its last quarterly deliveries and has kind of been stockpiling inventory of the Model 3 in China. I think that when you see, as was mentioned earlier, the competition at much lower price points from plug-in hybrid providers like BYD, new entrants into the battery electric vehicle market like Xiaomi, who we know of as a smartphone company, and then just Tesla's own willingness to reduce price, and also the uncertain subsidy market of China, if they're going to continue to give the subsidies they're giving right now. I think that short term, we are going to see a lot of competition here in China. And I think that Tesla's focus in 2025, 2024 this year, and 2025 next year is going to be ramping up the Cybertruck. Like we saw, the first few thousand have now rolled off, the Gigafactory in Austin. They're selling very well. Elon's got 2 million reservations, pre-reservations for the Cybertruck. If he wants to convert those into actual sales, he's got to get the price point down from $80,000 today. I have a model to reach $50,000 by 2027. and sell 100,000 vehicles of the Cybertruck globally in 2026, and then 250,000 Elon's stated goal by 2027, even though a little bit later than he would like to have that done by. The other big factor, aside from China, pricing, competition, and then the Cybertruck rolling off, is going to be the Model 2, the mass market vehicle that is on all of our hearts and dreams. We've been promised this. Elon is coming back and saying, no, it's back on again. We're going to reveal it. I think that it's encouraging to see what he's working on. I think there's really no doubt in my mind that he wants to get this to be as low of a price point up front as he possibly can. When he's talking about a $25,000 car, I think it probably starts closer to 30,000 ASP. But he's going to try to sell as many of these as he possibly can, and of course have the full self-driving mode ready for all geographies as quickly as possible. All of this together, I think that he's going to sell 500,000 Model 2s by 2026, and that's going to ramp up to 3 million vehicles by 2030. And I think that Tesla as a whole, in all geographies, sells 6 million units by 2030 and then over 9 million by 2040, making it one of the largest EV manufacturers and sellers in the entire world. And back to the discounted cash flow, why all of this, even with kind of the S-curve ramp up, which followed similarly to what they did with the Model Y. I think they're going to do something similar with the Cybertruck and then the Model 2 coming out of Austin. I'm giving a lot of credit to Tesla on the learning curve and the operational efficiencies. In other words, the operating cost per unit of output. I think that their gigafactories, once they get up to scale, are going to do similar to like what they did before. And I think they're going to actually capture a pretty compelling margin in the future. I think that for me, I modeled automotive margins to reach about 32% at steady state, 33% at steady state. And then, of course, they've got the other endeavors as well. But, kind of the headline grabber, I'm getting to the punchline here on this, is that I said that the car company of Tesla was really only worth $104 a share. When you look at all the fully diluted outstanding shares that are out there, I kind of put this number out there of $104. And I got a lot of flack for it. Right? A lot of people didn't like that. They said, wait a minute, Simon, aren't you aware that Tesla's selling for $180 a share, not $104 a share? And I really put the asterisks out there, the caveat that, hey, this is the truth of the auto business that as seen from a traditional and historical lens, right? If Tesla was just building gigafactories and could only capture 30% gross margins from those sales, and it was continuing to sell globally, just like a traditional automaker would, it'd probably be worth about $104 a share. But as I think a lot of others on this panel, and they're in this room right now, know that Tesla is not just a car company, and I think that a lot of the things that Elon is investing in today for the AI future of Tesla are going to come to fruition. He is going to succeed with them, and that those are worth significantly more than what the car business is as well. And so in this next chapter of the DCF, I framed it first as a car company, said, okay, $100 a share, that's a lot less than where it is today. I quantified what is the value of the full self-driving subscription, which Elon now is selling, on kind of this monthly subscription basis. If you don't want to pay up front for it, you can pay $100 a month for the full self-driving subscription. I think that's going to be in a huge number of the Model 3 and the Model 2s that he sells. And he's going to try to get the cost as low as possible because he can continue to capture the recurring revenue from that. And then I kind of looked in the third part here as I'm wrapping all of this up at the robotaxi network, which is just going to have an order of magnitude more of an impact than the car business will for Tesla. Even with very conservative assumptions, assuming maybe 70,000 global vehicles by 2028 are going to be part of the robotaxi network. I'm keeping a very low price per mile per rider. It's $1 for the end consumer. Maybe Tesla takes 20% of that as its own take rate. And then even if you discount those back to the present, keeping in mind this probably won't go live until 2028 or later, I'm still seeing that in terms of the value of that for an investor, even with conservative assumptions, is an additional $450 a share. And then maybe add another $100 a share for the full self-driving subscriptions themselves. So blend the two of those together with kind of the overall takeaway being Tesla as a car business may be worth $100 a share, not really representing this price of $180 that we're selling it today. But blend that with the fact that you've got Elon Musk, who's very driven, by his own guiding light of this master plan, who executes better than anyone else out there we've ever seen. And the ambition that he has, that he's doing a lot of the hard work today that he's investing in, the neural networks and the data centers and the AI chips and all these other things, kind of laying the groundwork for something that could really be a winner take most market. And I just don't see anyone else being at kind of Tesla's level when it comes to those things. And so the takeaway for me is I'm holding on to my shares. I'm not selling anything, at least until we see 2028, 2030 in the execution, as we get signed to kind of some of these more impactful projects coming online. It's very impressive to see what Tesla has done thus far up to the year 2024, but it's going to be even more impressive, in my opinion, to see what they do in the next 5 years.
That's me clapping. What a breakdown there from Simon. Awesome run through. You clearly put a lot of time and effort into this, and it's a pleasure to have you on the space. I feel like definitely people have thoughts. Larry, go for it.
Yeah, I actually had a question for Simon. So I wanted his take on the upcoming vote and how he sees that going, and the impact from that. I'd be interested to hear his take on that. And one comment I would have, I don't want to quibble with his valuation of the car company. I also have a relatively modest valuation for the car company, Quark Car Company. But I will point out that his estimates for the Cybertruck production for 2025 is incredibly low. Are you aware, Simon, that they're currently producing, that the rate of production at the Gigafactory right now is roughly 100K cars per annum? That's their current rate of output. Anyway, those are two questions for Simon.
Yep, great questions, Larry. Thanks very much for these. First, to address the stock-based compensation and the compensation, proxy vote that Elon's coming up on here. For my modeling purposes, I just used a set, diluted share count of 3.5 billion shares that I modeled for Tesla to basically treat as a cash expense to avoid the dilution. So any shares that are granted through stock options to employees, to Elon in the compensation package, whatever, it basically was following a similar trend of Tesla trying to keep that as steady as possible. So I treated it as a cash expense and avoided the dilution. I do not have an opinion yet on whether or not this will be approved. I do think that I'm not a huge fan of Elon selling so many of his shares to go out and buy Twitter, and then now he kind of wants to get back up to that 25% ownership stake. To be seen on whether or not shareholders approve that, but certainly he's got an important part of this company. I almost feel like he's irreplaceable at this point. And then I think the second question you had was about the ramp up of the Cybertruck. We know they sold a couple thousand there in the first quarter as it's ramping up in Austin. I have very purposely been conservative in my estimates. I estimated in 2024 that they were going to, at least for my model's purposes, sell 40,000 deliveries of the Cybertruck, and then 72,000 in 2025, 100,000 in 2026, and then 250,000 in 2027. If it exceeds that, great. It's worth more than $104 a share. But I also wanted to make sure that they were kind of able to get some of those efficiencies. I think the price is too high at $80,000 right now. They need to get it a little bit lower before they start converting those into sales.
Yeah, I appreciate that. So it's been an interesting period of time. I'm in Europe right now, and I'm following the Cybertruck tour. I'll be seeing the Cybertruck in Madrid in a couple of weeks, and then I will be seeing it in Copenhagen a couple of weeks after that. I will tell you.
So you're like a Cybertruck groupie.
Yeah, I am a Cybertruck groupie. I'm just aching to get back to my Cybertruck at home. Just aching to get back to it. I only had a couple of weeks driving it at home, and then I let so many other people drive it and took so many people for a drive. I really want to get out in the open road with it, and I'm going to go to Florida in it as soon as I get home. I'm going to take a road trip to Florida. But I will tell you, there's an enormous amount of excitement for the Cybertruck in Europe. Enormous. I mean, almost everywhere I go and everyone I speak to are aching to get their hands on the Cybertruck. And I've also done a little bit of study about European road rules. There actually is no reason why the Cybertruck couldn't sell in Europe. None. There are quite a few regulations that would permit that would allow Cybertruck to be sold. That's certainly true in France. It is true also in Spain. I haven't yet researched Germany, but I believe that most of these rules have been harmonized. So I think that the notion that Cybertruck would not be able to be sold in Europe, it's unclear to me why that is still, why that is held. Anyway, there's a lot of excitement for it here. And just to make the point that I made to Simon a little bit earlier, they are now reaching production levels, I'm told, on very, very good intel that they're reaching the 100,000 a year production rate currently. So I still believe and am confident that they will hit my target of 100,000 deliveries this year at these extraordinary prices. So that's just what I see coming from Cybertruck this year. So that's really all I had to contribute, Wolf.
Got it. Thank you, Larry. All right, Metaphor, what's on your mind?
Yeah, I've been looking at the the Cybercab pictures, and I'm surprised by how many folks don't see this like an extremely bullish sign, right? The fact that they're building the robotaxi, the fact that they don't have the steering wheel, also combined with the fact that Tesla knows what their models perform like in the cloud before they compress them and ship them. They've already talked about the next 2 or 3 releases being great. We've seen Elon talk about 1 out of 10,000 miles is giving them new information, meaning something they haven't seen before, haven't worked on, things along those lines. So I think there's been a lot of noise in the community, but we're losing like it's so funny. We're like getting to the finish line, it feels like, for FSD in many ways. And everybody's like freaking out. It's so bizarre to me. So anyway, I think people should look at that. And if folks in the community aren't familiar with like scaling laws around models, that might be something to look at and to understand that e- even though they may know where they are in the cloud, it can take many weeks to compress that down and then to validate it and get it out. And Elon has spoken about validation being the bottleneck right now.
That makes sense as well. Hey, Shy, you want to jump into the mix here? Some thoughts?
Yeah, I mean, it's funny that Simon was going over his DCF because I was a guest on one streaming a couple 2 weeks ago, I think, and I said that if Elon does, let's say they become, this will be purely as a car company. And if he stays and votes yes, and he actually fulfills his vision of the Tesla becoming this AI software play and maybe even Optimus, little spice of Optimus in there, this will be a $500 stock by the end of this decade. Like, that's a massive difference between what this vote can actually entail. And I love that Simon just went through his DCF model because, yes, he threw up, what was it, $85 or no, 104 and 450. Essentially, that's like when we're forecasting this many years out, essentially we have a similar trajectory of what Tesla worst case scenario is and what best case scenario is. So I love to see that validation. And today, I mean, I love the price action today. There's actually some heavy volume purchases on Tesla stock today that's happening. There's a ton of FUD. I fully agree. Like, I don't know who Warren is, but I do think that there's a lot of like like big time bulls just like trimming a bit or selling a bit. And it's really weird because I do agree this is absolute FUD. And I also am sensitive to the fact that there might be a low single digit percent chance that the vote actually goes no. But at the end of the day, like the risk and reward is just so heavily on the upside that I just don't want to take any kind of chips on off the table. Like, why now? Like when the stock's been basing for like 3, 4, 5 years, when the market's been raging, like this is one of the few companies out there that can actually have a massive runway to become this multi-bagger when we have companies like Microsoft, Amazon, Google, like they're all at all-time highs with multi-trillion-dollar valuations. When we have a company like Tesla, who is the leader of so many multiple secular growth the Maddox for the rest of the decade, only valued at 450, $500 billion. And I just think it's so funny to me that now they're selling. Like, this is not the time to sell, especially with the cyclical nature. Like, let's just say that Tesla is purely an EV company, which I so wholeheartedly disagree with. Let's just go with that narrative. If it is, and it looks expensive on the valuation right now, that's technically the time you're supposed to buy in a cyclical nature of a company, where the valuation looks extremely expensive. It's because the demand is so soft due to the macro environment, the interest rates being higher. Consumers are worried about spending, like, how are they going to afford rent next month, not buying a brand new car. But it just shows the amount of, the luxury that Tesla has of being able to leverage a lot of their um, optionality that they have that the other EV companies don't have. Like, they offer less than 1% financing on one of their cars. They can do that. They can reduce their margins on their cars just to make it cheaper for the consumer. They could do that. Do you think Ford can do that? Do you think GM can do that? None of these competitors can do that. But it shows the optionality that Tesla has for the worst type of macro environment, and they're still being questioned on their market leadership, on their being overvalued. Like, you have to assign a premium of the optionality that a company can actually have during the worst case scenarios. And we're experiencing right now in front of our eyes. This is the worst type of EV environment that I've seen at all, and by a mile. And Tesla's still kind of thriving. And you're seeing like these chess moves that they're playing with, that this is like they're testing the boundaries of like how flexible they can be on their balance sheet, and what kind of corporate strategic moves they can make in order to incentivize these consumers to buy their cars. Like, you're seeing the whole playbook, and it's nice to see, and it makes me less spirally of like, in the future, like, let's just say we get to the worst part of the cyclical nature of the business again. I know Tesla will be able to thrive because they proved it to me already in these past couple years. So end of the day, I love the FUD because it gives me an opportunity to keep adding to my shares. It's very rare to kind of get a fire sale on a best of breed name. It doesn't really happen. Like, bar not, like, fine, maybe a COVID 2020 crash allowed you to happen, but like 2008 recession, sure, it helped you happen. But again, these are really rare macro driven events that cause fire sales on best of breed names. It doesn't really happen. So I am capitalizing on this opportunity, and that's just my 2 cents. I'll pass it back to you, Goff.
Thanks, Shai. Want to make sure we get everybody an opportunity to voice their thoughts here. Kristen, you want to jump in?
Yeah, I love hearing what Simon had to say. There was a lot of good points, and I think it's really great to hear new people coming on the stage and sharing just how they've broken down Tesla and studied it. But one thing I did want to bring up that I think a lot of people fail to see is I know that there's a there's a lot of drama about this Elon and this vote coming up. I think it's way overblown for sure, and there's a lot of people that are super concerned and making it more of a big deal than they need to. But one thing I think we need to point out is that the same judge that did force Elon, a single individual, to buy Tesla, that had to cash out those stock shares, is the same judge that also said paying him the package that was promised him by a percent that the shareholders voted is too much for one person to take as well. So I think that's a strange irony that the same judge pointed out. But I wanted to point out today that I think it's really cool that there is different people that I think are running around driving the Cybertruck and trying it, and that the celebrities are loving it, and it's free advertising for Tesla, and I think it's great. One person in particular that I think it's great that test drove it was the UK Prime Minister Boris Johnson. I think everyone, or a lot of people, probably saw that, but he reported a very a very shining, astonishing, happy, smooth ride, that he loved it and he thinks it's great. So I think that's and he said it's flying colors. So I mean that's a good thing for people who are doubting over there. And I think it's cool to see different politicians getting even into the Cybertruck and shining on it.
Yeah, a lot of people adopting it, that's for sure. Jeff, I see in the crowd if you want to come up. Kim, you got thoughts to add in here as well?
Hello. Yeah, I mean, you know, I'm not a Elon fangirl, so it's probably good to have somebody on stage that maybe has, like, hear all sides of it. And I think the good thing is I don't need to be a Elon fangirl to appreciate Tesla, right? And to appreciate all that he has done, because I agree with what everyone is saying. He's probably one of the most innovative people of our time and is a visionary that sees the future. And sometimes I have to get past, what he says and does, which at times can be hard, to see what is his company and what are his ideas really about, like, right, like with Neuralink and his rocket company and Tesla. So I actually have been looking at a Tesla for the very first time, and many reasons why I'm looking at that. One is because I have a child who's going to be driving, and with all of the insurance, one is so I'm looking at this practically, right? Like the insurance that Tesla offers is way less than what you can get, on a ICE car. And also, I really think that being electric and having being in that field is the way of the future, right? So the autonomous driving I'm really looking forward to, and is another aspect that attracts me to it. So I just want everyone in the audience to know that you can get over whatever my personal bias is on Elon, and I do think he should be paid out those dollars, because there's a thing about loyalty and the commitment to what you said you were going to do. And I think the judge should not block that, even though it doesn't really matter whether it's too expensive or not too expensive. It was the agreement and commitment that was made. And so I personally think it'll go through. And if they have to appeal it, I'm guessing that it'll get overturned. And I like what you also said, Kristen, about the fact that the judge is kind of double-siding things here. But anyway, yes, I'm looking at a Tesla right now. The interest rate he has on the Y is like 0.99. So that's a very attractive right now if you don't want to pay cash for a car. And I don't think putting cash on a car is a good use of my money if I can get 0.99. So those are some of my more low level, on the ground, real world thoughts.
Kim, are you looking at the Y?
Yes. Yeah,
And
that's the one I'm looking at.
Was it mostly the interest rate that prompted you to look now, or was it more the timing with your kid, or what brought you to do it exactly now?
Well, I don't know if you guys know Mom Ange Trades on Twitter, but she is a big Tesla fan, and she has been on me about it. So one night when we were drinking wine, we got on the phone, and she was guiding me through which model would be. So the interest rate wasn't the thing at first, because the interest rate has gone down since I started looking at it. But she was guiding me through, saying this is the best model to get. You get the I think what's really pushing me is that $7,500. I mean, where can you get a brand new car of that quality and caliber for under $30,000? I mean, it's insane. And especially if I'm looking for a car that my child's going to be driving, right? So the 0.99 interest is just icing on the cake, because at the time I was looking, I think I could get an interest rate outside for about 5.79. That was still high to me. So that's the icing on the cake. So maybe I'll pull the trigger, and next time I'm up here, I'll tell you guys what I think.
What's your perception, Kim, on the timing of FSD, and did that play any role in your decision?
I don't know if I don't know that played a huge role in my decision. I like it, right? And I think it's a nice thing to have, especially when you have kids new or driving, to be able to have that option on there. To be quite honest, I have 4 kids and I am sick of driving. So it's very attractive to me as well. I mean, it's literally one of the least favorite things I think about doing in my day. So, unless it's a nice long drive, but sitting in traffic here and where we are in Seattle, and, so definitely it does play a role. I don't know if it's a deciding factor for me.
That car is a great car for a family of like 4 kids coming, Kim, especially if your children are big or even if you have a car seat. The nice thing about the Y is it's got a higher arch for the doorway. It's not so low like a 3. So I don't know. I've got children. I've had little babies. When you put the car seat in and your exhaust, I don't know if anyone has ever hit their forehead on a smaller or shorter car. But the Y is higher up and it's quite roomy. It's a great car if you've got dogs or you've got a bigger family.
Yeah, I mean, most of my kids are out of the house now, but at the same time, we travel. We like to go on road trips, and I think I was also looking for something where I could have, be able to fit 4 big suitcases in it, right? And um, get yeah. So that I think is an attractive feature too. Someone was telling me like you could fit 9 huge suitcases in that. I don't know if it's true or not, but yeah, if you could.
Yeah, laying down, definitely.
If you guys have any tips, any. The only thing I'm gonna miss is I love ambient lighting.
You probably,
I do see.
Well, the test
I was
Go
going to
ahead,
say, you
Penny.
could probably install your own ambient lighting if you miss it too much. Uh,
No, I'm just being funny. It's like when you're driving all the time. I have another car that I have that in, so I can drive that.
Yeah, the new Model 3 has ambient lighting, but probably the $7,500 point of sale credit will be better than the ambient lighting. And yeah, I'm really excited you're ordering a Model Y. I think you're really going to like it. Like everything you described. It's got a ton of space. It's really good for road trips. It's super safe for your kids. It's got all this AI in it that will, basically, try and prevent a crash even when you're driving manually. And, you said you are annoyed by driving. I think you're going to really love it comes with free autopilot. So on the highways, it can stay in the lane really well. And it'll have a 1 month trial of FSD. So you'll get to try that for the first month at least. And yeah, it can basically do all the driving for you. It's getting pretty comfortable now. So really excited to hear your thoughts once you get it, if you go through with it.
Yeah, well, I think I'm going to, but the money that you actually save too on the insurance is going to pay for your FSD. And that's the crazy thing, insuring kids. I think it's I don't know if I already said this. It's like $100 for a new driver where like I'm with USAA, which is one of the least expensive, right? And it was going to cost almost $300 to add her to that.
Yeah.
It almost tells you something about how insurance companies value the risk of new drivers versus the risk of FSD. When you think about it, they're not silly. Also, just curious, Kim, the interest rate, I've been thinking about this. Cutting the interest rate effectively cuts the cost of ownership, as does cutting the prices. Do you think cutting the interest rates, if the monthly payment's the same, do you think a lower interest rate feels better because it doesn't feel like you're wasting money and the money you're paying is going towards the principal of the asset? Or do you think that doesn't really play into your psychology?
In my psychology, it's the interest rate. I mean,
Yeah.
putting pen to paper, I don't really know, but I don't like the idea of shelling out cash that I could be having invested, right? I don't mean leveraged. I mean, but having in the market, I don't like shelling out $30,000 in cash to pay for a car. So the interest rate is really important to me. Obviously, there's a tipping point for car payments. And what also is attractive is a 7,500 back. And our state also gives, I think, 7,000, but if you add even one thing to that Model Y, it puts you over for my state. So that was
Like
the
paint?
only bummer. Yeah, just adding like anything. I think what I wanted to add was upgrade. I don't remember when I was looking at it, but you're right at the cusp. So you have to basically buy it bare bones. And I think that's why I didn't actually hit the buy button. But, you know,
Yeah, I think especially for people who are financially savvy, who are investors, who understand interest, it's one thing when you're, say, buying a car and you're putting that towards the principal of the car and it's going to depreciate over time. But when you're paying interest, which is essentially, extra financing cost on the car, it feels like wasted money, for a lot of people who are financially savvy. And I think also with the Tesla insurance, I don't know if your state has Tesla insurance, Kim, but one of the really cool things they do is they'll actually price insurance just based on how the person is driving. So a lot of insurance companies, they're going to look at their actuarial table and say, okay, you're an 18-year-old male or a 16-year-old male, you know, your risk is this based on the table. But they'll actually just look at how you're driving, and if you're driving safely, you get a low rate. And if you're using autopilot or FSD, they essentially give you a perfect driving score for that period, and you get a lower insurance rate because of it.
Yeah, I think I'm going to need to learn to take my foot off the gas pedal.
I think the
I like
interest rate point.
driving fast.
I think the interest rate point is important as well as we think about like valuation and sales. Tesla pivoting from cutting prices to lowering effective ownership costs through interest rates also preserves the resale value for fleet owners, for other, used car markets, things like that. So I think it's a good pivot that Tesla's doing.
Jeff, you want to jump in?
Oh, hey, yep. Great conversation. I mean, the whole purchase experience is a great conversation. Definitely get the why. You're gonna love it. And Mom and Trades is awesome. A couple of things. Just wanted to go through. I know we're all discussing, people selling the stock and so forth. And again, I'm a big believer in kind of like personal responsibility and understanding your own plan. If somebody sells or somebody buys it, honestly, it's just information that I take in. It doesn't cause or drive action. For me, what causes or drives action is my own analysis of the situation and what it means for me and my finances. So I just think that conversation is important. There's a bunch of other stuff going on. Well, first off, I'm excited. I'm taking delivery of a Cyberbeast Cybertruck on this week, Thursday. So I'm looking forward to that and joining that.
You're gonna love it. It's really good.
Yeah, I'm. Everybody says like it's the best car they've ever purchased. So I'm looking forward to that and joining that. It'll be my 10th Tesla, by the way. I've been driving Teslas for almost 11 years now. And exclusively, we always have a couple in the family. So it's also
Especially
kind of
since you're taller, I think you're really gonna like it, having that extra space.
yeah. And speaking of that, I was able to I've been going to a couple of the service centers, kind of looking around and getting close to this delivery. And I did sit in the new Model 3. I fit in the new Model 3. I'm almost 6'4", and I fit pretty well in the new Model 3. I was surprised. I think the build quality's off the charts. I saw the new performance version. It looks incredible in person. I think whoever orders this they're just gonna love the product. There's a bunch of stuff going on that I find it's super interesting. I saw that Rivian announced what they're doing with their lower cost R1T and S. Going to the heat pump, going to LFP, and for the 2025 model year. And it's just interesting timing because the tariffs have changed, and if obviously they're sourcing these LFPs from BYD or Cattle, they're going to cost 18% more than they did 2 weeks ago. So if they're trying to hit the 2025 model year, they're going to start sourcing, pretty soon, at least at the cell level. And excuse me. And so I just found that interesting. I'm seeing what's happening with Nissan pulling back in the U.S. on EV, stopping facility production in the U.S. and also telling their suppliers to pull back. Ford, has also sent new demand signals to suppliers at the same time. It was kind of strange that they're asking for help. If that help is like, hey, let's have design reviews together of how to make parts cheaper, I think that makes sense. If that's give me lower pricing on the stuff I'm buying from you, like that doesn't make any sense to me at all. And I think this is a very interesting period because I think on the other side of this, so what's happening right now? So Tesla is buying down interest rates. They're buying down lease rates. They've changed their approach, as Metaphor just said. I like the new approach. I think we're reaching a point in the second half of this year where at least the rate the interest rate reductions will start. It doesn't mean it's going to be, a meaningful reduction from the 5.25%, 5.5% rate that we're at right now, but the process will start, the sentiment will change. And I always like to look at, like, where do I see Tesla a year from now? And where I see them a year from now is, well, they've really got fit on the OpEx side. They really got fit, and they even trimmed up in their factories. A lot of these reductions were both on the factory side, which will hit COGS, and they'll hit OpEx as well. And at the same time, I think they're still going to be doing pretty decent production volume, so suppliers can depend on Tesla. And they're, as Larry said, they're scaling the Cybertruck, so those volumes are going up. The Model 3 is scaling in North America, so those volumes are going up. And so a year from now, so are they going to be in a position where they're really fit on the OpEx side? They've kind of firmed up some of the factory personnel in terms of that staffing and headcount and labor efficiency. And then, they've kept volumes at a pretty decent rate, so their suppliers can continue to drive efficiencies out in their, and then so can the gigafactories as well. I just think on the other side of this, I think they've got a pretty decent path to growing gross margins again, north of 20%. On the auto side, I think on the energy side, they haven't hit terminal rates on those gross margins, and they'll continue to improve, especially with I would say, Shanghai coming online, possibly later this year, if not early next year, for meaningful production. And I just look at it a year from now, then of course you have all the advancements in autonomy, and will we be on a version 13? And well, if we're doing 5 to 10x improvements, 12.3 to 12.4, where will we be a year from now? And that's when I'm kind of coming full circle to the, to like what's happening with the vote and what's happening with the company. I think what's happening with the company is they're on a pace right now that they really haven't been on in some period of time. The pace when they grew from 500,000 deliveries to 1.5 to 2 million deliveries, there was a period of growth there over 18 months that was, really good for the company, but that was on automobile hardware. And now what they're doing is they're going to shore up that automobile hardware, the gross margins, the efficiency, and so forth. But then this energy business is going to be in a much higher velocity pace. They're going to have multiple new models of vehicles, and then they're going to have this autonomy suite running on all of this. And I just think the pace of like product rollout, product being a piece of hardware or software, but very meaningful, like the best stuff in the industry. I think they're just at a pace that they haven't been at before. So I think, things look a little bit difficult, maybe in the current week or month. But over the year, I've never seen in following the company for 11 years, this pace of rollout of kind of new product introductions. And, I'm pretty excited about it. So I'll just close it there, and I'm looking forward to picking up my truck this week.
Love it. That's gonna be exciting. We'll definitely have to get the feedback once you grab that truck. By the way, we are gonna run for another 5 here. I love how packed these panels get and how many voices there are and of interest. There's so much to share and talk about when it comes to Tesla. The hour's never enough, but I try to do it every single week, so at least we're staying consistent and having a good time. I do see a hand up from Simon.
Yeah, I'll keep this quick because I'm really kind of curious with the answer. So, first to Kim, that man, Model Y is a great purchase. I bought mine 2 years ago. Put almost 66,000 miles on it in 2 years. I drive a lot, and man, anyone who says that Teslas and EVs can't road trip is crazy. I can't imagine driving another vehicle. My question was more. I was seeing some of the stats about the retail investor versus institutionals. And the numbers that I saw was that if you exclude Elon and Kimball, that the number splits down to about 47% retail, 52% of the shares owned being institutional. And of the 47%, 10% of that's not really votable for various reasons. So I think retail investors for the most part are probably not going to do the math calculation on, is this good or is this bad? They're going to say, hey, I want my stock to grow. Elon's the best way to do that. I support this. I voted my shares. It's only 100 and change, so I'm not maybe a drop in the bucket there. But I'm curious. I just feel like a lot of these larger institutions may make the calculation that, hey, we're saving billions of dollars to the bottom line, and the company's balance sheet might be better with a no vote. So I was kind of curious what the panel thinks is the leanings of the institutionals who, I've heard said there's not a huge upside to a yes vote, but there could be a big downside to the negative. Um, how do you think the institutionals will play? Because technically they can outweigh all the retailers right now.
Omar, you got thoughts on that?
I believe that the plan will pass and institutions will probably largely vote for it. Retail will probably have a majority vote for it as well. We can't really speculate about what the tally's going to be until June 13th when it actually comes out. So your guess is as good as mine, but I believe it'll probably pass. I mean, you look back at 2018, I believe it was approved by 78% of shareholders or something like that, 70 to 80%. So, the people who are voting on this were made rich by this compensation plan. And the institutions, I think, to do sort of a calculus and say, oh, we could claw back some dilution that we've already accounted for, but we potentially lose the CEO, you're really kind of shooting yourself in the foot there. So I think any institution, and a lot of these large institutions are like index funds and stuff, and they have rules for how they vote. They ask their clients or they vote in proportion. Some just vote with the board's recommendations. Um, so there's obviously a variety of different institutions out there, but I think most who are long-term holders, like for example, Baron Capital, they're going to look at this and say the most important thing here is retaining the CEO. Elon, obviously, I mean, y- I think really with electrification, we're looking at one of the biggest opportunities, economic opportunities we've ever seen, moving the entire world's infrastructure to this sort of new technology. And you look at everything that Elon has been laying the ground for with AI years before there was AI hype, right? They're building their own training chips. Years before NVIDIA stock was shooting to the moon, he came up with this strategy of pure vision self driving when people thought it sounded nuts. So hopefully people realize that time has really shown that this guy has incredible foresight. And the most important thing for Tesla investors to do is just retain him, right? I mean, this is a plan that was already approved. All we're doing is just reaffirming the same plan again. It doesn't, change anything. It's not any extra dilution that people weren't expecting. And I believe it'll probably pass. There's a lot of fear and hype, and I've been kind of playing into it to some extent because I want to scare people into voting. But to say that the majority of Tesla shareholders disapprove of Elon, I think that's probably not true. There's definitely some frustrated people out there. We've had obviously, a major correction from all-time highs, but to say a majority of people would vote to rescind his compensation plan, I don't think it's a majority.
Yep, I think you are on point. All right, Brad, I'm going to give you final comment on this one, and then I am going to roll into our next chat because we'll be at the top of the hour. Again, much appreciate everyone on here. I do say vote for Elon. I put it in the title of the space. Bradford, what do you got?
When you have bulls selling toward the bottom of a range in the stock, that tells me that sentiment's pretty low. There's still a lot of fear in Tesla stock. And I want to give Kim and others a little fear that are sitting on the fence for the Model Y. Allegedly, Tesla just raised their interest rate to 1.99%. So, sorry.
Brad, that's only on the 72-month term.
There you go. All right, we're at 1 p.m. Eastern. Big thank you, as always, to my co-hosts, Omars, as well as Penny, sharing some of the best Tesla information to be found out here. Simon came in hot today, a huge thesis. I encourage you to go to his timeline and deep dive into it. Shy, Bradford, good to have you on stage. Jeff came up on stage and spent time with us. I saw Jason in the audience, and Diligent was here the whole time, which was amazing. Kim coming with a little bit of a different perspective too, and talking about your buying experience. Kristen, Metaphor, returning to the stage. Just an amazing group and panel, and I want to give a big thanks to all of them for everything that they do with us here on these spaces. And we do this every Tuesday at 12 p.m. Eastern. In fact, next week, Tuesday is probably the only day that I'm even going to be hosting spaces. I'm at a conference most of the rest of the week, but I'm going to make sure that we have our Tesla space. The Tesla space stays on. That's the show goes on, as they say. So big thank you again to the crew. I do have some new speakers that are coming up for this next chat, and we are going to roll into that now and just keep talking about some of the best topics to be had on spaces. So, reminder, 12 p.m. Eastern, every Tuesday, we could talk Tesla. But for now, we're going to be talking about asset management. In fact, coming up in this next piece, and specifically on-chain asset management with Quota, who we have up here. So, Dhruv, I went ahead and got you up on stage, I believe. I think we'll have a few more speakers coming in. But to be honest, we can get rolling here since it is the top of the hour. Dhruv, can you hear me loud and clear?
Yes, I can. Thanks for having me. Glad to be here.
My pleasure. Thanks for coming up on stage. Hopefully, you enjoy a little bit of the Tesla talk as well. I know that there's a huge audience that's interested in that, but I also think that there's a massive audience that is interested in everything that you are doing together with Quota. So, with that being said, bringing a couple more speakers up who will be participating in this AMA. Let's talk about it. Let me turn the mic over to you. Maybe you can just give a brief intro of who you are, who people are hearing from as we work into this next conversation.
Sure, yeah. My name is Dhruv Dang. I am the founder of Coda Finance. We are a DeFi team, and we are building the Coda ecosystem. Our mission is to decentralize institutional financial services and make them accessible to everyone. We're doing that through on-chain asset management and credit markets. Our two products, or flagship products, are 3Balance and Constant. Both of them are live and in production today. They've settled millions of dollars of swap volume and loans fully on chain. A bit about me, my background is in TradFi. I used to work on a trading floor in a bank in Singapore in structured products and flow rates. I also spent some time in tech working at Apple as a software engineer and building my own software company here in Canada where I'm based right now and bootstrapping that to 7 figures in a year by myself and a 2-person team. So really excited to be working on Coda, and we've been working on this for about 3 years now because it's the intersection of everything I've done in my career to date, and I'm really excited to share our achievements with you today.
I'm excited to hear them. Asset management, this area with banking and everything is very personal to me. This is my background. I worked in private wealth management at Goldman, did private equity at Versa, and now really interested, as always, in capital markets, both public and private. So it certainly speaks to me. Now that we have a little bit about you, tell us a little bit more about Coda and everything that you're doing there.
For sure. So in terms of on-chain asset management, we just launched something called 3Balance. It's a way for people to rebalance their on-chain portfolios in 3 steps in a single flow. Portfolio management is a pretty broad topic, as you're likely an expert in that area. But there's this concept of rebalancing where you think about your portfolio in terms of percentages. You don't think, oh, I hold 10 ETH. You say, okay, 40% of my portfolio is ETH. And that's how the vast majority of fund managers think. They think in terms of percentages. In crypto, there aren't really tools that enable us to think in this way and then act on our risk-based decision-making to be able to reallocate our portfolios based on the percentage holdings we want to have. So what 3Balance does is that we connect with your MetaMask wallet, and it sources all of your portfolio holdings into a single page, and you can enter which percentages you want to hold of each asset. And then it allows you to actually rebalance and figures out the trades you need to place to get the ideal allocation that you'd like. People rebalance as often as monthly to maybe once a year. It really depends on the individual strategy. It's a great way for repositioning exposure. This is one of the products in the Coda Finance ecosystem. Our ecosystem is designed around onboarding apps like this to help us all realize the mission of decentralizing financial services for all. and sharing revenue with our stakers in the DAO.
That's really fascinating. I don't know if we've quite had anything exactly like that on stage here. Before I go too far into it, I am curious because you mentioned you came also from the TradFi area. Why did you decide to switch to DeFi after all that banking experience?
Yeah, so in TradFi, I used to work with a lot of funds and retail banks. So I would actually design a lot of the investment products that retail banks would sell to regular people, and it was a really interesting discussion that we'd have, particularly about at what stage in life the people were at. So for example, we'd have to build a retirement product where someone is retiring, they've got about 20 to 30 years in retirement, and they want to have their funds managed carefully. So we design a product for that. There'd be a product for someone who's just starting out their career. They've got probably a lot of debt from their education. Maybe they're buying a house soon. So we need to design investment products related to that. One thing I noticed was like how much value is extracted from a trading floor to the hands of the customer. There's a bank that's packaging up this product and creating the risk. They're taking a margin. Then there's the retail bank that's also taking a margin because they want to make a profit on it. And then finally, it ends up in the hands of your everyday person who's, let's say, a retiree who's worked their entire lives to get to this point. And a lot of their value is just extracted the moment they sign the papers for a product like this. And it wasn't something that sat right with me. I actually got involved in Bitcoin in 2013 when I was on the trading floor. And I'm pretty sure people made fun of me every day for it at that time. And I remember buying my first Bitcoins on Mt. Gox. But I really believe in the mission from day one, and learning how it worked was a really big challenge at the time because there wasn't much about it. So you had to be mission aligned. And Bitcoin was born out of the global financial crisis in 2008. Wealth shouldn't be going through the same hands over and over again for the entire world. So all of these things came together eventually. And as I skilled up throughout my career, I was like, okay, we can actually do something now, which is what prompted the move to DeFi. Like I wanted to ensure that there wasn't so much value extracted for everyday people when they deal with financial services, and try to make them as simple as possible, just based on what I'd experienced at the bank.
Perfect. And Dhruv, I think there's a lot of excitement here from the panelists that I have on stage as well as the audience. So I feel like we're going to have a fun time up here. Lady Trader, you want to jump in first?
Absolutely, absolutely, yes. So I've been working with Dhruv for a very long time on this project as an advisor, as a key opinion leader, and just kind of keeping an eye on what they're building, right, and supporting them as much as I can. And it's been so phenomenal just to kind of see what they were doing, when the markets were not very good. Because what happens is that usually when the markets are bad, some teams just give up and they're like, hey, markets are bad, we're done, crypto is over, let's move on, we're not doing anything, or, but Coda was completely opposite, right? They continued to build and build and build, and Dhruv just coming out of new products and new utilities, and it's just so amazing to witness, because that's what you want to see in crypto. You don't want to see teams with what we call bear market fatigue, because that those projects are not going to survive the next bear market, which is not going to happen for a few years. But still, right, that's something that you've got to keep in mind. And these kind of projects that build consistently with so much passion and energy during the bear markets are the ones that you want to keep an eye on, right? Those are the gems that you want to keep an eye on. And so it's been absolutely fantastic just to kind of see what they're doing. And then also just coming from the perspective of someone who has seen a lot of predatory practices in lending and things like that, DeFi is like the way to go, right? DeFi is our hope to change things. And I don't want to sound like ChatGPT here, but what we're talking about is bringing that revolution in basically lending. And the products that Coda is building, they are just fantastic. I would love to kind of discuss a little bit more about the backers that you have, Dhruv, because I know that a lot of communities, especially my community, we care about who are the backers of the project, right? Obviously, who is the team, and really, I would say pretty much all of the time we are investing in teams more so than anything else, right? Backers and teams, those are most important. You have a really awesome team and really, really solid backers as well. But would love for you to kind of give us a background on, some of the backers that you have, the fundraising activities that you've done so far, all of that good stuff.
Yeah, that sounds great. Thank you so much for the kind words. Honestly, we wouldn't have been able to keep persevering without the support of great people like yourself. So we really appreciate you, helping us along from such an early stage. In terms of our backers, so we did a seed round in 2022, right as the last bull cycle was ending, and we raised around $1.3 million. My background, as I mentioned, is in consulting, and I consider myself a lean operator. So my general operating philosophy is pay your team as well as you can, and then try to cut costs elsewhere in terms of overhead. So we had a pretty lean burn while keeping our team consistent. So the team that Coda has right now is actually the original team that founded Coda's product. So it's really quite exciting to be able to say that. So that runway lasted us till about January this year. And then I put in my own personal capital for Coda. So something I actually haven't shared before, which I'm happy to share now, I guess, is I have deployed more capital than any of our investors into Coda myself, because we are so mission aligned. One thing that motivates us is this belief that we will realize our mission as a team, and we're going to do it with our community. And I'm more than happy to put my own money behind that. Those funds were deployed to market making on Constant, as well as to fund operations. In terms of our backers, we worked with investors in 2022, and they've sort of stuck by us this whole time, which is really something wonderful to say. I really want to call out Blue 7. So they're not as big a name as most people know, but they were our first investor, and they backed Coda when we sort of just had this idea and mission, and we had a rough plan on how we wanted to execute. And it was very, very different back then. We were just a single protocol project, which was at the time called Coda Loans, which is now known as Constant. And they have been with us the whole time. Every single time we've had a challenge, they've been ready to jump on a call and help us out, which has been really, really great. Some of our other investors, they're also incredible investors, don't get me wrong, but I just want to highlight Blue 7 because they've done a lot for us. So IOSG, Longhash, Sanctor, C-Squared Ventures. When we were pitching investors at the time, I remember we had a lot of meetings, and it was difficult to pick the right people. Having lived in Singapore myself, I knew that Asia was really had the right atmosphere and energy behind crypto, especially at that time. And a lot of our investors are Asian investors, and they sort of have the right perspective. Financial markets are relatively new in Asia compared to the West. So they're already used to innovation, I think, culturally in finance. So being backed by the right people who have the right exposure in their own portfolios was very, very important to us, and they've stuck by us this whole time as well.
That's fantastic. Can you also talk a little bit about the projects, not just the investors, but the projects that you're closely collaborating with?
Yeah, for sure. We've been working pretty diligently on partnerships, and recently we announced a partnership with Gora Protocol and Rossi, which merged with Gora, which we're very excited about. We started out Constant started out as a fixed rate order book style lending and borrowing marketplace. We wanted to bring US dollar and Ethereum yield curves to the blockchain and have it be fully decentralized. We've deployed these markets. They exist. There have $2 million of fixed rate loans settled through Constant already. But how can we push this further? Credit only works when there's actually credit risk involved, when people are borrowing under collateralized or partially or not collateralized at all. And while Constant supports this, it's a socialized credit system. So we wanted to explore ways we can segregate credit risk. And we need a really good Oracle and credit scoring data feed to do that. So Chris at Rossi and I have been chatting for a long time, sort of strategizing on how this partnership could work. And with the Gora merger, it made a lot more sense for us to work together because we effectively need an oracle for credit scoring and illiquid asset pricing, because then we can start opening up on-chain lending and borrowing against illiquid assets, as well as under-collateralized borrowing. So creating a true credit marketplace beyond just, say, features of a credit marketplace like fixed rates has been in our sights since day one. And it's been something quite challenging to achieve. But I think the partnerships are in place, the technology is in place for us to execute on this in the coming year. So that's been a very exciting partnership. We also have a really deep partnership with 1inch. Shout out to the 1inch team. They've been really great with helping us launch 3Balance. So they have something called a dev portal, which allows us to use their aggregated prices without creating smart contracts ourselves. So it means that the smart contract risk is isolated to the 1inch contracts. And that's what 3Balance is powered by. So all of the swap prices you see on 3Balance, when you go to rebalance your portfolio, our algorithm is figuring out the optimal path to make the right swaps. So you pay the least amount of gas and the lowest amount of fees. Those swaps are powered by 1inch. And that's been a really deep partnership, helps 3Balance do what it does. We have 2 more partnerships we're announcing for 3Balance in the coming weeks. We can't right now because they're just finalizing some details, but they're going to enable cross-chain swapping, which is a huge feature. So instead of having to select your network to rebalance your portfolio, you can just look at your cross-chain portfolio and then rebalance it across chains in one flow. So those are the big partnerships. There's a lot more I could talk about, but I don't want to monopolize the entire space with just answering this question. But those are the 3 big things that are happening right now in the Coda ecosystem.
Perfect. And then let's talk a little bit about the 3Balance app. So obviously, this is one of the concerns that a lot of investors have is, you're connecting, your wallet to an app online, right, to balance your portfolio. They can do that themselves without going through 3Balance. And B, there is a little bit of a risk always whenever you're connected. And I know we talked about it, so obviously that's great. For my personal use, this is a great app. But could you talk a little bit more about that? Because I know this can be a concern, because I had that concern until you explained to me how it works. So if you can talk a little bit about the 3Balance, why we should be using that, and then B, the security behind it, that would be great.
Totally, yeah. Security is something we take very seriously in our team. And whenever we put out smart contract code, it's always audited fully. And usually reputable teams will do that. So like 1inch is a good example of a reputable team. What makes 3Balance special is that we are bringing financial knowledge and expertise to simplify interacting with existing contracts. What that means is all of our work happens off-chain, but your funds never go off-chain. It's a fully self-custodial tool. So if I could illustrate how a flow might work, you connect with MetaMask, it sources your portfolio data from the blockchain, and then you enter your desired allocations for your portfolio. What 3Balance does then is it figures out which swaps you need to place. It then speaks to 1inch and says which transactions need to be placed for these swaps to actually happen and which approvals, ERC20 approvals, need to happen. Then on step 3, you just see this list of transactions and approvals very transparently, and you have to sign them one by one. And this was a big point of debate in our team because it can be tedious if you're rebalancing 10 assets and you have to do 10 approvals. That's not the best user experience. But what's the alternative? The alternative is we take funds into custody in our own contract or off-chain. That's a no-go. That's not really decentralized. I mean, maybe with a smart contract it is decentralized, but then there's a huge new dimension of risk because we're taking custody of funds through a contract. That needs to be audited, and we need to go through a very thorough security process. But there's a great opportunity here for us to simply have users control their funds. Like users interact with DEXs every day, interact with 1inch quite regularly. Why not just simply allow them to do the transactions themselves? And that felt like the right call, and it was a security-driven decision.
really good questions there, Lady Trader. Did you have any other thoughts? You want to give a chance for Ray to jump in?
Yeah, I mean, if there's any other questions, definitely jump in.
Ray, what's going on? What's on your mind?
Hey, thanks so much for having me. So, no, fantastic stuff. This is my first time hearing about Code of Finance, and this is some really fascinating stuff. Definitely curious, at this time, who are you guys seeing as your primary user base? I heard mention of the DAO, and this is all completely new to me, so super excited to be taking some notes and learning here. Are you seeing primarily DeFi investors who are excited to be kind of minimizing gas and having this kind of rebalancing in their portfolios? Any institutional clients that are kind of starting to take a keener eye in terms of using this kind of DeFi infrastructure? I'm just curious about the lay of the land.
Yeah, that's a great question. So 3Balance has a few different use cases that I think target different groups of people. The first group that sort of got me in the train of thought for 3Balance in the first place was one of my friends who has a crypto portfolio, but checks it maybe twice a year. He's, I think, an exception to the rule when it comes to crypto investing, but he really checks it very rarely. And he wanted a way to not only view his portfolio, there are like a ton of tools out there that allow you to view your cross-chain portfolio, but actually to have a look at everything from a top-down view and then rebalance it and make some trades in one go. Basically spend as little time as possible managing his portfolio and trading so he could get back to doing what he really wanted to do. So he was the first person that sort of put me on this path for coming up with 3Balance. So I think the casual long-term crypto investor, the people who are willing to wait out the bear cycles and hold through all the bull cycles, are a major user group. And I think that it depends, like institutional versus retail. I think there's a case for that. There's a use case for that both in institutional and retail. There are a lot of long-only funds that simply just have Bitcoin on their treasury or Ethereum on their treasury. Maybe they want to have a 50-50 split between the assets. So rebalancing quarterly is useful for them. 3Balance has only been out for 2 months. We are working on safe multi-sig wallet integration, which will allow us to cater to those treasuries really well. So that's one use case. On the retail side, you could trade with as little as a cent on 3Balance. There's no minimum amount. So we do see a lot of retail traffic coming through where people are, for example, swapping their small balances. This is another use case, which I find really interesting. So on centralized exchanges like Binance, they introduced this feature where you can swap all of your small balances to BNB. It's a great feature because there's always this like dust that hangs out after trades, and it's kind of annoying. You can't really do that on chain. And, I would love to be able to swap that to, say, Ethereum or wrap Bitcoin or something. With 3Balance, you can. We're launching a feature called Quick Actions really soon that makes this even easier, where you can already go in, set all your small assets to 0, and then auto the asset that you want. So all your dust goes there, and it'll figure out the trades you need to place fully on chain to swap your small balances. So we have a huge array of use cases from retail to institutional. One more use case I'll talk about because to be a good portfolio manager, if you're thinking long term, is actually not to rebalance every day, right? It's something you do once in a while. The ways you might go about rebalancing are if you see your allocations, your portfolio has drifted too far from what you want. So if you use that example portfolio of 50% wrap Bitcoin, 50% ETH, but now it's 60% ETH, 40% Bitcoin based on the last 24 hours rally, you probably want to rebalance to get back to 50-50 because it's past some threshold of 2 or 3% drift. Another reason is a time-based rebalance. So maybe you haven't hit this threshold yet, but you want to rebalance every quarter just to as a practice of keeping your portfolio on track. So a lot of long-only funds will look at it that way. But in crypto, it's not just about sticking to a basket of assets and being very diligent about only keeping those assets in a rigid allocation forever. There's a lot of fluidity in how people deal with their portfolios. There might be a coin that's doing really well, or there might be like a black swan event with a protocol another day. So repositioning your exposure is a very useful use case with 3Balance because I can change my allocation as well. So I don't have to just keep adhering to my existing allocation. I might say that, look, I'm bullish on ETH and Wrapped Bitcoin, but I'm also bullish on ARB, right? Like it's got a great proxy for ETH. It's like high beta for ETH. But I also really like what the core team is doing. You know, they've captured a lot of DeFi activity in TVL. I'm going to have 50% Wrapped Bitcoin, 25% ETH, 25% ARB. 3Balance enables you to do that. So when you're rethinking your strategy, that's a really useful use case. And again, I see the application of that across the spectrum of retail to institutional. I do see it with users using Constant. They will have maybe like a bunch of like wrapped ETH or Arbitrum, and they want to figure out what they want to put into collateral versus what they want to lend. And they'll come and swap on 3Balance and then go back, deposit their collateral or lend in Constant based on that kind of repositioning.
Awesome. Looks like that was good for Ray. Perfect. Action. You got any thoughts here?
This is like something that we all need in crypto, to be honest with you. Like I've been waiting for this solution to come along for a long time now. I know a few players in the market are actually doing something similar, but it's just exciting to hear like the backstory behind what you guys have done, man. Like Drew, honestly, like not a lot of people are willing to dig into their own pockets to fund things these days, and it's exciting to hear anytime someone is willing to put their money literally where their mouth is and self fund a lot of this stuff. If you don't mind me asking, during the downtime, right? Like I don't even know if you want to call it downtime, but while we were going through the bear, what was the team doing? Because obviously you kept everybody, which is amazing. But what were they up to?
Yeah, that's thank you so much. Honestly, it's one of those things where I don't talk about it much, but it is a point of pride. So I'm very grateful to be able to work with the team I have, and that we've all been loyal to the mission over this time. So in the bear market, it was really tough. Like it was very tough on, I guess, the mindset that we needed to be able to execute over that 2-year period. And keep in mind, we raised right at the end of a bull market. So it was the vast majority of Coda's existence has been in a bear market to date. So what kept us going? First of all, I think we are all mission aligned. Like, we brought on team members that are mission aligned and realize that this is the outcomes we want to see for DeFi. Like we don't want to see protocols just trying to profit or extract value, just like banks do in TradFi. We want to actually realize, Satoshi's vision, which is money for the people, and to do that, we need great financial services. So that sustained us significantly. We were also very lucky because we had a great community from day one. We had people willing to be ambassadors even through the bear market, people that were supporting us, all the way when we didn't have token rewards, right? Or we didn't have any idea what our token would look like in the really early days. So super grateful for that. And that continues to sustain us. And our community has grown 4 or 5x since then, which has been really wonderful to see. But the culture of the community has stayed the same, which is let's realize this mission together because it benefits everyone. In terms of what we were actually doing and building, so I think as a founder, I made a lot of mistakes along the way as a leader, and I do think the burden of leadership falls on everyone on the team, but especially on the founder, because that's usually where the vision comes from. And we started with Coda Loans, and we built this very innovative protocol that came with a lot of complexity, and that took a lot of time. It took us a long time to go to market, and when the bear markets have set in pretty early, we hadn't finished building our product, and we said, okay, let's take a bit more time and build it out a little bit more because no one's in a rush to deploy anything right now. So we did, and we built out what is Constant today, and it's a really amazing product. But I think at that time, with scarce opportunities around in crypto, we just put our heads down into product development and came up with ideas as a team. And we were a one protocol team, one product team until about mid last year. Then we started hitting a turning point where we said, okay, we have a clear idea of what we want the token to achieve and how it benefits the community, but we don't think we can support that vision with just one product. And we need to start coming up with some other ideas. And on-chain asset management, that was something that was sorely lacking in the space. There'd been this great innovation with automated market makers and DEXs, but the innovation had kind of stopped. There were a lot of clones at the time. We said, we can do something here. There's a lot of existing smart contracts out there, a lot of existing TVL. How can we unlock a lot of potential value? And the excitement started picking up. And of course, the price started moving, pretty well the last 5 to 6 months. But that was never the primary motivator for our team. There could be a bear market for 5 to 10 years. I will figure out somehow to fund our team to ensure we keep working and delivering value and services. And I think everyone's aligned. I've said it a few times already, but I'm super grateful to work with the people I do. They're incredibly talented, incredibly focused, and they just care. They care a lot about ensuring we achieve what we've set out to achieve.
Sweet. Yeah, jump in, Ray.
Awesome. Appreciate that. Sorry, I didn't know if, what the cadence was per se, but loving what I'm hearing so far. This is super fascinating stuff. So I've heard Ethereum, Wrapped Bitcoin mentioned. I have one question regarding kind of what chain you guys are on or what chains, and then what assets you guys currently support. And then I have a follow-up question regarding how you guys, or if you're thinking currently about risk-based rebalancing, whether that be fundamental. So let's say like the ARB team decides to YOLO it all into dog with hat. I don't know why they would. Or for example, a technical rebalancing. Like for example, if the BTC ETH ratios maybe start to look a little spooky, if there's opportunity to have a risk-based rebalancing rather than a ratio-based. And of course, that would hinge on what assets you support and what chains you guys are on currently.
Or why they wouldn't go into dog with hat, right?
Based on the last week, true. Very true.
That's funny. But that's a great question. So let's talk about chains first. So in terms of the Coda DAO / ecosystem, we're native to Arbitrum 1. The Coda token will be native there. And we can talk more about that, I guess, a little later. But in terms of the products, Constant is the lending and borrowing protocol is native to Arbitrum 1. It's because it's all on chain and an order book, it needs to be in a very cheap gas environment with very low latency. Arbitrum is perfect for that. 3Balance, because we've talked a lot about security in our operating model, because we're using existing aggregators or liquidity pools, we are multi-chain. We already support 5 networks, Arbitrum 1, Ethereum, BNB Chain, Optimism Base. And we can support all of the chains from 1inch. The 2 partners that we're going to be onboarding soon, they support cross-chain swapping. So 1inch does same-chain swapping. The ones that do cross-chain swapping will allow us to support even more networks. But the rule of thumb is they're EVM compatible. We're in the business of unlocking value in existing liquidity, existing protocols with 3Balance. So people can make the right decisions about where they want to invest and what kind of assets they want to hold. So that's our model for expanding across networks and supporting network interoperability through 3Balance. You mentioned a couple of interesting things there about risk-based rebalancing and just other strategies for rebalancing in general. So right now, because 3Balance is self-custodial, we don't want to take users' funds and hold them. We want users to control their funds. Users have to come to our app and basically when they see something happen, they can, let's say, for whatever reason, the risk with the ARB token is not what they wanted. So that strategy of having 50% wrapped Bitcoin, 25% ETH, 25% ARB is no longer working out. They can come back to 3Balance, set ARB to 0, and then put the balance in wrapped Bitcoin and or ETH. So that's generally the flow right now. One thing that we've been researching is account abstractions. So this allows people to upgrade their accounts on EVM to an account abstracted account, which means it's a smart contract. What that allows us to do is to say, hey, we see that you really like holding 50% wrapped Bitcoin, 50% ETH, and that you rebalance when there's 10% drift. let us do that for you automatically. And you don't have to give us your funds stay in your wallet. That's the beauty of account abstractions. It's in development. There are some solutions that kind of work, but the final implementation is in development. Once that goes live, we will be one of the first teams to support it, because there's a huge use case, right? Like I have this strategy and I'm continually doing the strategy that is by definition automatable. And to address your point, that strategy doesn't just have to be based on portfolio drift. We could find ways to use our Oracle partnerships like Gora to track things like volatility or sentiment analysis, whatever risk parameter that's important to our investors, to use that as the mechanism for rebalancing. Sentiment analysis is sort of tongue-in-cheek because it depends on your source and like your strategy, because it can just be noise to a certain degree. But using a technical strategy, for example, like technical analysis is useful to a huge pool of investors. You could, in theory, use a technical strategy to trigger certain trades or rebalancing with rebalance and account abstractions. So that's the approach that we have right now.
Beautiful. Hopefully that answered the question there, Ray. I do see we got a couple more people that jumped up on stage. Lady Chair, do you want to jump in, and then maybe Nick says something?
Yeah, absolutely. I wanted to ask you, Dhruv, about the liquidity bootstrapping that you guys will be doing, because what happens traditionally is a lot of times projects are doing IDO. Your approach is a little bit different. You're actually going for the liquidity bootstrapping and making sure that basically everybody has one, fair chance to basically get in. The market decides the price, all of those good things, which is not always a standard, right, in crypto, because everybody just wants to raise as much as possible, going to all of the launch pads that are out there and just doing IDOs everywhere, with like 10 different launch pads. So can you talk a little bit about your strategy behind the liquidity bootstrapping? How are you going to conduct that? And then also the marketing plans after that?
Yeah, that's a great question. So why are we doing an LBP? We make products for people, so we figured people should figure out the price of our token. Also, counterintuitively, a lot of crypto projects work towards this public fundraising event as like the biggest thing in the life cycle of their business. A lot of crypto protocols and businesses only really last a few years. Like I personally want to be working on Coda like 25 years from now. I want this to be my career, and I'm speaking very selfishly about that, but it's true. Like I do want to keep working what we're doing. I want to work with the team that we have. I want to speak for my team, but I hope they also want to keep working with me for the next 2 decades. So this liquidity bootstrap pool, it's really more for the community to get in early than it is for us to like benefit from it economically. Like we do need funds, a portion of the funds to pay for our wages and some of our infrastructure costs. But in general, it's just to give the community an opportunity to get in, and 40% of the proceeds, the net proceeds, are going to go into the liquidity pool on day one. And we are going to prioritize on-chain liquidity as a going concern for our ecosystem. That's just how we operate. The liquidity bootstrap pool will take place on Ethereum, but the token will be native to Arbitrum, and that TG will happen a couple of days after the LBP. In terms of marketing, so you and I are working together, Ra. So I'm really excited about that, and I know you've taken a keen interest in researching our project to understand it, which I'm very grateful for. It's also nice to have AMAs like this, and to discuss very openly and transparently, what is it that we do? Like, what do we do on a day-to-day basis? And what are we trying to do for the next 10 years? And that's what we intend to keep doing, is that, we are doing things a little bit differently. We approach things differently as a team. We want to make crypto very simple. Like, we don't want to put out the most complicated lending and borrowing protocol out there, the most complicated DEX out there. We want to make things very simple. And the way we do that is by helping other people learn and teaching. And that's our marketing strategy. And the same is true for our Coda ecosystem and the Coda token. The Coda token is designed to give people flexibility, to have a stake in the protocol, and to earn value from the protocol, We want it to be the ultimate target for value accrual. And that's the message that we're going to be sending as we ramp up for the LVP.
Yeah, Kayla.
Hey, I joined a little bit late, but I'm always really curious about how this could help credit in the future. So I'm curious how this could help someone's credit in DeFi because that's a really slept on market here.
Yeah, that's a great question. So Constant is our lending and borrowing protocol or product. And we designed it with this idea of building a yield curve on chain. What does that mean? A yield curve is how existing credit markets in TradFi, where a ton of money is traded every single day, is prices credit or prices loans, usually between financial institutions. So there's different levels of credit markets. There's interbank all the way down to retail. For us, what we realized is that there's no real institutional credit market that's relied upon in crypto. And we built Constant with that in mind. You know, keep in mind we have this mission of like achieving true DeFi for everyone. So we don't put limitations on like minimum amount to lend or borrow. But the idea is that if a bunch of crypto banks were to appear and they're doing huge amounts of volume and they have retail credit customers, you know, people that need to actually borrow funds for their day-to-day expenses or to fund their businesses, then they would use something like Constant to manage that risk and manage their books, basically settle interbank or into institution. That's the long-term goal for Constant, is to be the clearinghouse for credit on chain. Now, anyone can go and use Constant. That's the beauty of DeFi. You don't have to be a big bank or a big institution, but it allows you to lend or borrow 1 cent as easily as it is to lend or borrow $1 billion. And we think that building that infrastructure will unlock credit on chain long term.
Good question there, Kayla. What are you, Drew, when it comes to the rest of 2024, what's got you most excited here?
So many things. Where to begin? So Coda ecosystem, Coda DAO, that's like front of mind right now because you're the LVP so soon. That has gone through so much thought to get to where it is. And we're going to publish very, very detailed docs tomorrow. So I will share a link with all of you to share with your communities if you'd like. The Coda DAO and Coda token are designed to benefit the people that want to hold long term. That's the ultimate goal, is like we want people who are as invested in our mission as us to be supporting our community, and we want to reward them accordingly. And that's what it's designed for. So I'm really excited for that in 2024 and governance that will be coming out later this year as well, because there's the largest portion of our tokenomics is our ecosystem treasury, and those funds can only be spent through governance votes. So your governance influence also increases the longer you hold Coda. The other things that are interesting are exciting me are the stuff we have in store for 3Balance, Constant V2, which we haven't really talked about. So we're really leaning into this yield curve narrative with V2. With 3Balance, with all the partnerships we're building, we're actually building something called the 3Balance API. So we realized there are a lot of other DeFi adjacent or DeFi products out there. Let's throw an example out there, Fjord Foundry, right? That requires swapping as a part of their business, but it's not essential to their business. So with Fjord, it's about participating in an LBP, which is technically a swap, I get it. But when you participate in LBP, you can choose which assets you want to participate, even though the LBP might be against wrapped ETH, for example, you want to pay in US dollar coin. So there's some swapping happening there. But wouldn't it be amazing if I have US dollar coin on Arbitrum and I want to participate in this LBP that's existing on ETH, and I don't have to bridge over my assets, and I don't have to convert it from US dollar coin to wrapped ETH? That would be pretty amazing. And that's what 3Balance does. And at its core, that's the engine of 3Balance. So what we want to do is open this up to other protocols in 2024. We're already working on this. And we want to, and we're basically open for business. We're saying, come to us or we'll come to you and we will customize the 3Balance API for you so your users get exactly what they want. That's something I'm really, really excited about. The benefit of this for the Coda DAO, so keep in mind, all of these products I've talked about do a 50% net revenue share with stakers from TGE. So that's from day one. That API creates revenue for 3Balance, which is ultimately shared with Coda stakers. Really, really excited about that. As we build out more and more partnerships for liquidity provision, our API will become the go-to for integration. And there's a way for us to benefit other communities as well, not just our own. The third thing I'm really excited about is Constant V2. Constant V2, I mentioned a bit about it earlier, but we want to use the 3Balance API for Constant so people who want to participate in the US dollar coin on-chain lending and borrowing market at fixed rates don't have to have US dollar coin on Arbitrum to do it. So again, using cross-chain, the cross-chain API that we have in 3Balance, we can enable that. So I can lend my USDT that's sitting on Base on Arbitrum and manage my position without having to ever bridge funds, ever do a swap directly by just using the Constant app directly. And again, that also generates revenue in Constant and in 3Balance, which ultimately is shared with Coda stakers. And the last thing, I know I've gone on for quite a while, is a new product, which we haven't announced yet, but I'll share a sneak peek, is about escrow management. Might be some of the most boring words you've ever heard, but it's something that's sorely lacking in crypto. There's a vibrant OTC market in crypto. We're building a product that allows people to transact safely, fully on-chain, using smart contracts with escrow-like services. A quick backstory about that. I have a friend of mine who's not really into crypto, who has another friend who likes to make NFT art, was trying to sell it and got scammed, for whatever reason, didn't get paid properly. And I was like, oh, they should just use one of the reputable platforms. I'm not an NFT artist myself, so I'm not as familiar with the service offering of these platforms, but I was like, the names that come to mind are like OpenSea or LooksRare. And he said, yeah, it was on one of those platforms. And I was like, oh, that's not good. The leading platforms for like these OTC transactions are not reliable. Like people are getting screwed over. We can fix that. So we're designing and building a product right now that's going to come out later this year. That's going to be the third product in the Coda ecosystem, which we're very, very excited to share more about in the future.
I love the excitement. There's definitely a lot that's coming here. There's so much more research people can do as well to look into this. One of the things that we actually pinned to the top of the space is a special 40% off discount code as well that people can use for trading spreads on 3Balance app. So the code is just Wolf40. So really easy to remember, Wolf40. I encourage everybody, go to the top of the space. There's one link pinned up in there. It's also one of the last posts from Coda Finance, so you can go find it there too. And just take that code right in there. 40% off discount for trading spreads, pretty much going to help you beat any other area. So there is your competitive advantage, right? Why should you use this? There you go, financial advantage, as well as I think there's potentially, we're talking about it, that engineering advantage, that platform advantage here as well. So a lot of pieces that continue to stick out to me, make me excited. I think you heard Lady Trader's excitement, right? That was definitely palpable throughout here. So there are really a lot of pieces. One question which I did have was, how can you talked about partnerships in the beginning of this and the partnerships that you had, but how can other builders continue to partner with you? And what kind of partnerships do you hope that you continue to establish?
Yeah, that's a great question. We are open to all sorts of partnerships. The best way to get in touch with us is through email, which is hi@coda.fi. The kind of partnerships we want, so we're looking at unlocking value from existing capital and liquidity on chain. So if you have a DEX or an aggregator and you want that supported by 3Balance, we'd be happy to work with you. If you have a lending and borrowing protocol where you have wrapped assets that can be used as collateral in Constant, we'd be very happy to work with you on that as well. One thing we are working towards, and this is a bit more forward-dated, is in the Coda ecosystem, we'd love to onboard third-party partners. So right now, it's just our team working as a partner, building these apps. We want to support other builders as well. People who don't necessarily have the capital to launch a token and do it, the right way. People who don't know how to set up a foundation or a governance app, but have these great skills and a great idea and are willing to work and offer that to their communities. We want to support you as much as we can. That's what the Coda ecosystem is all about. It's not just about the core team. So we would love to partner with you. That's going to come out later this year.
There you hear it. If you are someone in the audience that fits the bill, feel free to go ahead and DM them directly as well. Never hurts to get the conversation started early, in my opinion, especially with quality companies such as these. So, I mean, we talked a little bit through the token as well. I think it'd be good to kind of just remind people, maybe those that weren't here a little bit earlier, just one more time, kind of when and where token will be launched and how they participate in the event.
For sure. So the token price is going to be bootstrapped through a liquidity bootstrap pool on Fjord. That's starting on May 28th at 3 p.m. UTC. It's going to last for 3 days. So fjordfoundry.com, that's the place to access that pool. That sale is going to take place on Ethereum, but the Coda token and the Coda DAO will all be native to Arbitrum 1. So we will have a TGE between June 4th and June 7th. We just want to make sure we dot our I's and cross our T's. That's why there's a window on Arbitrum 1. That's when we'll launch the Coda token, the VE Coda token, which is part of our staking protocol, our reward distributor, and the Coda DAO app that allows you to stake your Coda tokens on day one. There is no vesting contract for LVP participants. You get 100% at TGE. All of these details and the nuances will be published really, really soon, like literally within the next 36 hours. Follow us at Coda Finance on X, and we will just stay tuned for all that information.
Very nice. Yeah, there's an exciting time ahead. A lot of things continuing to come up. I feel like we touched on a lot of these points, right? We ran through, and again, if you didn't get in soon enough, you can always listen to the replay here. It is recorded as well. We ran through items on the token, investment rounds, timeline, right? All these different pieces. There's so much to cover here. We could maybe even cover a little bit more on the DAO, but I do see a hand up from Lady Trader.
Yeah, I was actually coming to DAO. That's definitely one topic that we need to cover a little bit more. Dhruv, if you can talk a little bit about the utility of the token. And then also, I know that there is an ecosystem that you're building. And sometimes what happens is that with these ecosystems, people usually come up with different tokens, like each token for every part of the ecosystem. So how are you strategizing that? Is this going to be all powered by Coda token? And then also if you can just kind of dive into the utility side a little bit.
Yeah, for sure. There is only one token for the Coda ecosystem, and that's the Coda token. Only way to really, it's the entry point to the ecosystem as a staker and a community member. The utility of the token is that it can be staked to earn something called VE Coda. VE Coda is the mechanism of how we reward people who stake for the long term. So every day that you stake your Coda tokens, you earn VE Coda. There's no limit to how much you can own. So the longer you stake, the greater your share of the rewards that are paid to VE Coda holders, and the greater your share of the governance voting power for every proposal that goes through our governance platform. Those are the two main ways of getting value from VE Coda. That's going to go out at the same time as the Coda token. So you'll be able to stake and start accruing VE Coda straight away. So the asterisk is usually there's a lockup period with unstaking, but there is no lockup period with unstaking Coda. The only sort of incentive measure we have is that your VE Coda balance resets to 0 if you unstake. So again, we're trying to incentivize long-term participation in our ecosystem. How do rewards actually get paid to stakers? Where did they come from? So we have an initial pool of rewards that's going to come out of the token supply that will last for 2 years. That's going to be something we publish details about really soon. But in the long term, the vast majority of rewards will come through revenue share. So we have this concept of ecosystem partners. That's a team that's building apps inside the Coda ecosystem in exchange for marketing support, ecosystem support, maybe a token grant from an ecosystem fund, right, in Coda tokens. Then we have ecosystem apps. So these are the apps being built by those teams. Those apps enter into an agreement with the ecosystem DAO to share their revenue with stakers. And we also have clauses in there if like the product gets sold. It's really beneficial for the builder because there's low overhead and upfront cost to actually get building and start producing revenue, control the IP, which is really nice, but it benefits the Coda ecosystem members by basically giving them a community from day one, and the ecosystem members get revenue share as a result. Over time, we obviously want a vibrant ecosystem. And I've said this in the past, we want the core team to be irrelevant, right? We want this to be a decentralized project where we are just one of many ecosystem partners. So the value and utility of the Coda token, the VE Coda token, is literally having a say in how we get there and earning value along the way. That's the I guess the summary of how the utility that the token offers.
Perfect. All right. I think we did cover everything pretty thoroughly here then. Of course, people can go ahead and do their follow-up. One more time reminder, there's a 40% discount code using the code WOLF40 that you can plug right in. Just go to 3Balance app. The link is in the top of the space, easy to find. So Drew, I'll turn it back over to you here. Anything else that you would like to put on people's radar here? If someone enjoyed what they should do following up from this, some call to actions here.
Totally. We love community engagement. We love feedback. You know, have a chance to use 3Balance at 3balance.co. Use Constant at constant.fi, and tell us what you think. Tell us how we can make it better. How can we make it more accessible to everyone? Help us realize our mission. You know, we are listening. We have an active community on Discord, which is we have this ticket system where you can create tickets for feature requests or partnership requests. We have a Telegram chat. I mentioned the email earlier, hi@coda.fi. Get involved, talk to us, we're listening. The other thing to keep in mind is we are running a countdown promotion right now. So it's volume based. So if you need an extra push to use 3Balance and Constant, if whatever volume you use now for the next week or so, you will be airdropped Coda tokens as long as you're one of the top 1,000 traders and volume creators until TGE. So there's an opportunity to earn Coda tokens before TGE and have those airdropped to you after the token is live.
All right, well, perfect. That's going to do it for this space together with Coda. I do encourage the audience to go ahead and check them out. We've given you a few ample resources you can dive into. I want to give a big thank you to our panel as always, Lady Trader. It's great having you on here, of course. Action, Nix, Ray joining in for one of our first AMAs together, Kyle, Kayla. Thanks everyone that hung out with us, and of course the Coda Finance account. Appreciate everyone being on. I am going to hop here. I'll be co-hosting another space in just a minute, talking more about the markets. Got a few more spaces coming up today, so looking forward to seeing everybody on them and just wishing everybody a great rest of your Tuesday. Thanks again for hanging out with us, Drew.
Thank you so much for having me. This was great. Really appreciate you all taking an interest in Coda. Hope to see you around.
Perfect. We'll chat with you soon.